Good morning, good people of Raleigh. My name is Victor. I'm going to be your host for this morning. It's just a minute past 8 a.m. So I'd like to welcome you all, but also I'd like you to exercise a little bit of patience for more persons to join in on this call, right? So that we can have a very good session. The session is going to be concise and not too long, but you will definitely get value for it, right? Good morning, Matilda. Good morning. Good morning, every other person. So please just hold on a bit. Let's wait for more persons to join this call, right? Thank you so much for your patience. Good morning once again, everyone. I'm at Victor and Mr. Chinedu. Actually, I wasn't talking. I've addressed the persons who were here earlier, asking them to exercise patience for more persons like you who didn't join exactly 8 a.m. to join in on the call, right? So we were just waiting for more persons to join the call. But I think it's 8:05, so we can just begin. Whoever comes in will actually join us. I just wanted to wait so we can have a smooth session, no back and forth, right? So please, if you can hear me, kindly please indicate if you can hear me. Good morning, Mr. Victor. If you can hear me. And Mr. Chinedu, Happy New Year. I think this is the first time uh, I'll be seeing you. This is the second time we're taking this review for this year, though. Yeah, thank you, Matilda, Jack. All right, so let's begin this session. So as usual, like I said, I'm not a science student, though. I didn't really do science, but I know this for sure. That thank you, Mr. Chinedu. That an object remains on the state of rest, except an external force acts on it. All right. So, given that price will only move based on the fact that there's an external force moving price. Okay. Now we have some things we call constants, which is supply demand. Supply demand is one of the ways where price constantly can move based on the availability of or based on buyers and sellers and the availability of liquidity to carry out the buys and sells. All right. By liquidity, I mean the ability to carry out that exchange. So if I have 10 million naira, for instance, or 10 billion naira, and I want my 10 billion naira to be in dollars, right? I want to convert it to dollars. So obviously, I'm going to be placing demand, right, for the dollar and in exchange for my naira. So what will actually make it possible is the volume, the amount of dollars I will have supplied to me based on my. So if I demand for 10 billion and I have just say five, I don't have the equivalent of it. I could only exchange currently at the market. I could only exchange, let's say, like 5 billion naira, half of it. Then there's an outstanding half left, isn't it? So it creates what we call imbalance in the market. An imbalance occurs a lot. All right. So that is constant demand supply. Those kind of things happen once in a while. But there are other things which we call the variables. They occur once in a while, which are the fundamentals. For instance, our focus today is going to be more on the CPI. That's the inflation data we're expecting from the US. Hence, guys, it's just, I'm not going to be talking too much on this, but it is also good to pay much attention. And especially for the fact that Trump is going to be, by next week, is going to be coming on board and is going to be implementing his own policies into the market. Okay, so all eyes on this for today. So this can also influence the market. For those who have traded some major fundamentals such as CPI, you will know that by 2:30 p.m. today, expect some kind of volatility in the market. But so that being said, let's jump to our chart right now. So let's start from, okay, this is a USD. Let's start from here. This is USD. So what do we expect? Now, I might just use a combination of things to analyze my chart. Now, the truth is, whenever you come to the market, for instance, like this, sometimes you might not really know what to do, but you need to carry out a bit of analysis. It gives you a clearer perspective, right? So what do you mean? You can look from a higher time frame and go to a lower time frame. Look at the structure of the market. So for instance, I would always like to go slightly higher. Let me see. Right. So this is my default time frame is 1 hour first. Then I go to my 4 hours. This is how it looks like on my 4 hours. I zoom out again. So you can see that I'm bullish. Like price has been going up for a while, although I had a retracement here, right? So we can have, let's say, so for the fact that after the retracement, I always like to see where price started pushing up again or where price started pushing to the downside. So I have where price started pushing to the downside from here. I use my trend line to identify that area. Okay, this was where I had a bearish momentum. Price was just falling massively. After which, this was where the lowest point. What I'm trying to do, I'm trying to mark the key levels where price had turning points, the key levels, right? So this was my support level, where price turned and started being bullish again. Okay. So after this point, do I have a retracement? Remember, I'm on my 4 hours. I'm on my 4 hours first. After this point, do I have a retracement? Now, what I call retracement, I don't mean just any minor. I need some significant retracement. Like this one, this pullback is a minor one. This is also a minor one, or will I say a range? Price didn't really go down, it only ranged sideways. This is better, all right? For the fact that this is a 4 hour time frame, this is significant. Because when I move to a 1 hour time frame, you will see that price really came down to an extent. Okay. So I want to mark my significant turning points after retracement points. So price retraced, stopped at this level and started to go up again. So I just basically mark all of these particular points. But don't forget, we are bullish, okay? So in other words, I'm looking at buying, isn't it? I'm looking at buying this market. Meanwhile, I can see also that there is another retracement here. There was a retracement here after which price became bullish again. Notice how price came back to that same level, pulled up again, came back to that level, pulled up again. All right, so price is just bouncing around this level. So what I mean is, when price is bullish, you always want to take cognizance of those key areas after the pullback. So this is the pullback or the retracement. I mark this level where it stopped and where it started pulling up. I mark this level. This was a retracement. It started pulling from here. I mark this level. They are very significant, right? So what do I mean? It's more like as price is going up, it's building like when you are building, constructing a building, you go floor by floor by floor. From the ground floor, the top part, you need to cast it, make it strong enough, then you can build on it. After you build on it, you cast the top, you make it strong enough, you build on it. So what I mean is, price is, as it goes to the upside, it retraces, it tries to cast it, make it solid, continue again, come back, retrace, cast it, build again. So that's what price is trying to do. In other words, if price can retrace all the way to this level, what do you think will happen? If price retraces back to this level, what do you think will most likely happen? Is this an open question? I expect your answers. So let's just analyze together. So you can just type your answer. If price comes to this level, do you think it will keep going down or do you think it will pull up? What do you think? It will push up, but it will pull up. Now, okay, it will go up. Now, yes, thank you for your responses. Now, I don't want you to be definite because the truth is in this market, nothing is ever 100%. If you agree with me, from experience and even economically, there's something we usually say. That's why we use the word ceteris paribus. That means all things being equal. If this condition holds, and the problem is most times the condition does not hold 100%. So you might not expect the same, right? So there's what is and what ought to be. Now we are expecting that a price comes here. It has done it before, all things being equal, it should pull up again. If the condition that happened here and here and here happens here again, then we should expect a pull up. But there's still a 20%, a 10% chance that price might not do it. Hence, that's why you would like to protect yourself with your stops, isn't it? Good. Now, that is by the side. I've done my analysis on the higher time frame. Now, let's go to the lower time frame and see how it looks like. If I come to my lower time frame, this is my 1 hour. You see how it looks like, right? Good. Now, I would just like to show you something. I'd like to show you something. Okay, I think, okay, this is, yes, JPY. So in other words, I'm safe buying anywhere around here. But the problem now is, notice that recently price is looking at not really coming all the way down. Price stopped at this level, right? So that's what I did on my 4-hour time frame. This is my external, then I can have my internal, right? Those are my minor structures here and there. So you can see that at this point here, this was Monday's low. This was Monday's low. It respected this same level again yesterday, right? Because I was watching this place yesterday, it respected this level. And is it possibly going to respect this level? Okay, so we might be looking at price might not really come all the way down into this zone here. Price might just pull up from this particular point right here. You can get to this point, right? So, but if you are doing this, you can protect yourself with some stops. If you break this level, then wait for it to get here before the main buying starts. And the good thing about it is that if it starts buying, if at all you buy from here and it takes you out, in negative, it goes down, takes you out. Then you wait for it to get here. Now, if it starts buying, notice how massive it bought. You know, the distance price has to cover is going to be massive. So you're going to make some good profits, And if it does it again, because it has a lot of room to go. So I think I'll be looking out to take a buy from here. And if it doesn't work, then I'm going to buy from here. So I have 2 points on my USD JPY. Meanwhile, whatever I'm going to be doing now is before 2:30 p.m. Once it's 2:30 p.m., it is no longer analysis as usual. It is now fundamental that be in charge of the market, at least, even if it is for some minutes or for some hours, depending on the data and how it impacts the market. Okay, so I really do hope you understand. Meanwhile, if there's anything you didn't get here, please head over to this video again on our YouTube channel at Rally Trade. Just go to YouTube at Rally Trade. You'll see this video. You can watch this video again in case you missed anything in how I'm analyzing the market. Now, this is USD CAD. Okay, let me take this out. This is USD CAD. Let me quickly do some analysis on the USD pair. Remember, sorry, before I do this, what we did initially, we went to our 4-hour time frame. Right? Went to my 4-hour time frame. Now, I think USD CAD is trying to look similar to that of USD JPY. So currently, you see price ranging. So on my 4 hours, clearly, am I bullish or am I bearish? Like, is price going up or is price going down on 4 hours? Has it been going up or down? Remember, we are doing this analysis together. Okay. So what has price been doing for some weeks now? All right, more responses, please. I need your response. Okay. All right. Thank you so much. Up, down. Adewale says down. Down. It has been going up. Adewale, please look at it again. Look at it again. Well, you might be seeing down. Perhaps your phone or your laptop, your device is maybe you flipped it upside down. Maybe. You know. Okay, ranging. Yes, currently it's ranging, but like I said, for some weeks now, it has been going to the upside. Thank you, Temitope Akindele. I think you put it right. He said up, but currently ranging. Exactly. Thank you so much for putting it that way. I think that's better. All right. So price has been going up first, but currently it's now ranging. Now, this is why it's very important that you mark out your significant retracement points. Now, there are a lot of strategies around this where we can attack the markets, which we don't really have time to start breaking down each strategy one after the other. Okay, but if you can just master this little technique with some little patience, then I think things will be working fine, right? Things will be working fine. So what do I mean? Let's do it again. What we did before. So I want to see where price pulled up, retraced, then continued. Okay, so you see over here. Let me just start from all the way down. It pulled up, retraced, then continued. All right, so retracement point. All right, so I mark this level. Then where else? Again. So pulled up massively, retraced, then continued. All right, this particular level. Now it's also worth noting that different instruments retraces slightly differently. Okay, different instruments retrace slightly differently. So if you see someone who trades a particular instrument consistently, the person most times will be able to tell to an extent. That is the psychology aspect of it. So that's why they say jack of all trades, master of none. If you are not focused on one, you need to master 1, 2, 3, 4, 5. Like if you are very conversant with a particular instrument, you'll be able to know sometime when the retracement is enough, all right, based on that particular instrument. So here, after pull-up, this is not a retracement. This is a range, all right? This here is a range. I mean, I need retracement back to the downside, right? Although these ones are not that significant, but this is a range, so it doesn't qualify. It doesn't qualify. Now, after this, this is a retracement. This, all right? So after retracement, start pulling up. So hence, I want to mark this. Okay. So now somebody might argue that, oh, why didn't you bring it all the way down here? This is the lowest point. No, this is the main support level. This was a breakout. Like this was a false break, retraced. All right. So if your stops is too close, it might have taken it here. So I want to know when price is doing the false break, right? So this is extreme. This is the main support. If you notice here now, it's trying to respect this same level. Now, from where price is, all things being equal, this is where we now say all things being equal and give room for error. Then I go back to my 1 hour because here I would like to pick my entry from 1 hour. So guys, what do you think we will be expecting from USD CAD? What do you think we'll be expecting from USD CAD? Is it going to be bullish or is it going to be bearish from what we have analyzed so far? Yeah, so let's be fast with our response, please. I know we are doing this together, please. I'm not just talking and saying this, we are doing this together. It's likely to bounce back up. I think I like that language. It's likely. Remember, I told you nothing is ever 100% right, so it's likely. Most likely, I think I'm liking the way we are structuring our terms now. You are beginning to get me. So nobody is saying, okay, AY said buy. Yes, most likely going to buy. Most likely going to buy. Okay, most likely going to buy. That is on the condition that our uptrend remains valid. All things being equal, we are still bullish. But right now, price is ranging, which means there's a tendency that uptrend price has lost momentum to continue going up. If not, this high here should have been taken out. Sorry, this high should have been taken out. So, but price has been ranging from support to resistance, support resistance. Now it's not going to do this forever. It's most likely going to break out to the downside or to the upside. Okay, so we are just following what we are seeing for now. All things being equal, price keeps pulling to the upside, then we are looking for a buy. On the condition that price breaks that particular level, on the condition that price breaks this particular level, retest and it holds and it pulls down, then we can be looking out for shorts that sell. For instance, here now, price broke out, but immediately returned. So the retest did not hold, returned back, broke out again, returned inside again. All right. So there's much more pressure for price to pull back inside here. So we are looking at going bullish from this particular point. So that's for USD CAD. Let me hide this. Okay. Let me just complete like one or two more currency before we move. I like to take it one step at a time. Currencies, commodities, indices, and if we have time, agro commodity, then we move. Okay. Meanwhile, this Friday by 2 to 3 p.m., we're going to be having some currency market pro, right? Where you'll be exposed. We are going to be revealing the secrets to trading currencies. There are certain things that you don't know yet, okay? These are inside secret, and our head of education, Mr. Sheku Anujo, for those who are familiar with him, is going to be doing some expose uh, on that particular, he's going to be doing some expose in that particular meeting or training session this very Friday by this very Friday by 11 a.m. Yeah, by 11 a.m. So you are going to be getting notifications for that. But please hear it from me for the very first time. Now, let's keep moving. So this is USD, sorry, this is Euro USD. Yeah, the greenback. Now, the greenback, very, very interesting. So let's see. Now, as usual, I go to my 4 hours. Now, based on my 4 hours, where has price been headed? Where has price been headed? Where is price heading to? Up or down? Up or down? So our responses are needed here again. We are doing this together. This is euro dollar, euro USD. So where is this going? Your responses, please. This is my 4 hours. I zoomed out. What have you been experiencing? Okay, it says Matilda down, the downtrend down. Okay, down. Okay. So price has been pulling to the downside. Um, so hence, we need to just know how to now, if first of all, if that bearish trend is over, or if we can still continue on that downward momentum. Okay. All right. So now that being said, remember what we do now. We are looking for our major retracement points. Now, I'm doing this just like very similar to market structure. Hence, so what I mean is after market pull down, retraces back so that we see the size. So see a pull down, we see a retracement where the retracement stops here, right here. Okay, this is what I'm talking about. Then price pull down, retraces. Okay, I don't want to take this as a retracement after this pull down. It's not significant. Meanwhile, it's more like a range. It's not really retracement like that. So this is a continuation, and after which price came up here before continuing. Okay, so it's all of this area right here, the whole of this area right here. And if I'm to extend this, let me extend it so that you would. So if I'm to extend this, you'll see this significant level here. Now, price did some massive drop again. Then you can see some, let's say retracement, not that much, just retrace before pulling down again to the downside. Hence, I want to mark this where the retracement stopped. Okay. All right. So now, price pulled massively, this retraced back to that same spot. So what I mean is, there are times where you would see price coming back to that particular level, which is going to be a good point to continue trading that point. So for instance, why price moved massively? No, after price moved massively downward, retraced here, you could see that after a break again, if we had marked this level where the retracement stopped, and pulled back down again, mark here, you would have noticed that price retraced to that point, you take another sell, you maintain that same level, you take another sell. Now, the only condition for which we now say price, okay, is no more bearish, there's a change of character, is when price breaks above this level and retraces and it holds and pulls back up, then we can say we most likely are back in an uptrend, but no more a downtrend. Also, for now, price keep respecting our key levels, which suggests that we are still bearish. Okay, so all things being equal, we are going to be looking out for sells. Hence, where is that best point to look out for your sell trade? Now, after price did massive move, retraces to this point, and or let me put it here because continue ranging and then pulled out. This was the highest level of retracement. Hence, you notice price returned to that level again and pulled back to the downside. So we've had a massive pull again. So the price can potentially pull all the way to this point again. So if it does that, then what are we going to do? So this is where we will be most likely looking out to short the market. Now, there's a tendency that price might not get there. Meanwhile, so that's the external. Let's look out for a lower time frame. Not that low, but on a 1 hour time frame. Now, if you can be patient enough for price to return to this level, catching sells and it starts to sell, this is where you're going to make the most profit. All right. So for instance, if it does this, I place a sell. Now I'm going to be guiding myself by having my stop loss somewhere above. I can just give it some room. If it actually sells, then I'm looking out to make some good profits. Okay. But internally, there is a problem, which is a minor, you see this level right here, is trying to stop price. Okay, it has created an internal resistance for price, which means price might not potentially get here. Instead, you see the way it's trying to be bearish, might come down. So in that instance, we are going to be targeting this low. All right, less pips, but compared to if price can get to this point, see how massive it will cover, right? So now that means on our euro dollar, we are not decisive right now. If at all I'm going to be bearish here, then I'm going to be having my stops here. And if it takes me out, I wait for price to get all the way here before I go in for another sell. At least it should respect one of the two. Okay, you should be able to respect one of the two. Now, this is just very simple strategy, which is just taking cognizance of your key levels, where price retraced from. Some can say support resistance. I don't want to call this my support and resistance, not really, all right? Because there are three elements involved. The first one is you want to look at your structure from your higher time frame. Okay, you want to look at it from your higher time frame. You must be able to identify your highs, lows, your highs and lows, your market structure basically. Although we didn't do that in full. Then secondly, after you do that on your higher time frame, you scale down to your lower time frame, and you see if there's also an internal, highs and lows and the likes. So you'll be able to now pinpoint where price is most likely going to be turning from. So you wait for price there and you execute your trades. So that is for euro dollar. Meanwhile, remember everything we're going to be doing now is before 2:30 p.m. By 2:30 p.m., fundamental takes over. So price is not going to be respecting technicals like that. Price might just pull in any direction based on the result of the inflation data, which is CPI. One more, then we just move GBP USD. So we had the CPI for GBP today, which was bad. Price quickly recovered. So you can see on 15 minutes, it was bad for GBP. So see this drop of price has recovered. I don't think it will hold too much weight again. Meanwhile, on my 4-hour time frame, sorry, let me take this out. On my 4-hour time frame, Mr. Felix, good morning. Nice to have you here again. All right. Akolinus, it's been a while. You're most welcome. All right. So this is GBP USD. So this is my 4-hour time frame. So guys, where have we been headed? Up or down? Up or down? Where has price been going? Up or down? This is where I need you. I need your responses. Downtrend. Okay. Are we sure? Who else? Down. Okay. Pemsky down. Downtrend. All right. So that means we are potentially looking for sell trades, right? Okay, downtrend. Good morning, sir. USJPY. We've done USJPY actually at DME. We've done USDJPY. We can just come back to the bottom. Let's even see if price is trying to respect any of what we've done so far. Okay, so we've done USDJPY. We are waiting for price here before we take our buys. But remember, we're going to be having our stop. I saw somewhere that fundamental tend to respect higher time frame flow or structure. The distortions are mostly on LFTs. Is that true? Blue field effects, if I get it correct. Yeah, to an extent. But much more higher time frames like your weekly, sometimes your daily, but your weekly highs and lows. And there are also conditions to it. Okay, I'm going to be answering some of these questions. So before we dive into it, let me answer these questions. So for blue FX field, it says sometimes fundamentals respect technicals, right? Yes, like I said, much higher time frames, like you also pointed out. So for instance, let me use this. This is my weekly time frame, right? Good. Now, this is more like the highest point on my weekly time frame. Okay, so imagine I'm to have my CPI right today. If on the condition that before CPI, price can find its way to like the highest point. This is a supply area for those who don't know, actually. So if price can move all the way to this level here, and it's there, let's say a day or two, price is resting around that level a day or two before a major fundamental like your NFP, your CPI, FOMC. Now, it means that even if there is a very high tendency that price will pull down. Now, even if it supports price going to the upside, you will just see like a spike to the upside. But price will want to still respect this key level on a very high time frame. Hence, that spike to the upside will not be long. Before you know, you have a massive retracement and price will now start coming down. But you'll be wondering, but the news came out good. Why is price going down? Yes, it respected that news. It just had a spike to the upside because price already resting at a significant resistance and price need to pull down or its major supply area, right? So these are conditions to it. So there are conditions. You don't just say, oh, let me mark out my whatever. It has to be on the condition that so and so happens, then you can respect your fundamentals. I don't know if that answers your question, right? So price is almost at our point of interest where we're looking at putting entering our trade. I think we also did USD card, right? Okay. Okay, so price also resting at that level. And we just concluded on euro dollar. All right, so there's an inducement to the upside before price pull all the way down. Now I think we just move on to some other instruments like I think some persons have been saying gold. Oh, I have a euro GBP before we go. Please, sorry, let me just quickly look at this before we go. Euro GBP. Okay, I think this one is bullish. All right, I'm looking bullish. Aha, good. So what I'm saying is there are certain instruments that based on their particular behavior, sometimes you'll be able to tell what price is doing or what price most likely to do. Okay. Now, if you see on this one, I had to go even higher because it wasn't looking that clear. And higher on my daily time frame, you will notice that price is trying to respect this particular level right here. Price is trying to respect this particular level right here. And on my 4-hour time frame, you'll see that price has gotten to that particular limit. So there are two options here now. There are two options. It's either you're going for a sell, have your stop loss above, or you want to wait to see if it will break it, retest before you keep being bullish, right? So that is for Euro GBP because this is like what we call a verified resistance area. Although price has been bullish for a while now on my 4-hour time frame. And on 1 hour, this is how it looks like. Okay. This is how it looks like on 1 hour. So let's quickly just go to our gold now. Okay. So this is my 4-hour time frame. Now let's do what we did from our initial. That is from our USJPY, USD CAD, Euro USD. And what did we do? We were trying to mark out our significant highs and lows on our 4-hour time frame. Okay, on our 4-hour time frame. So let's do that again. So let's start from here. Let's see, after having some significant, okay, let's say significant pull to the upside after this retracement, price started pulling up again, right? So we mark the end of the retracement all the way. Now, did you notice that price came back to retest that level after a long time? It came back to retest the same level, right? So we're focused on after this massive move, the retracement, pulled up, we marked the end of the retracement, price came back to that same point again. Okay, that's one. That's one. So gold can sometimes break key levels to go back to remember. It's more like, let me put it like gold likes to remember the past. It has a good memory. It doesn't forgive easily. All right, so now after this massive pull-up, You can see this significant retracement here, and before a continuation to the upside. Hence, we mark the end of that retracement. Now you see how price respected that level. Okay, you see how price respected this same level on a number of occasions. So you can see how price came. Now this time it didn't respect it because it went to this previous one, but it came back, and the next time it started respecting it. A pause break, but came back, respecting it, and we are still there, right? So after these two, we've not really had another significant one because we have our high all the way here. We have this high, and we have this major high here again. Now I want to mark it because of the fundamental, because CPI, who knows, price can be massively bullish and it will target one of these areas, either here or break here and go here for the next few days. Now, what do I mean? From my 4-hour time frame, I've marked my significant areas. They're not much. Then I scale down to my lower time frame again to see if there's an internal, structure that I need to take note of. Now, I want to see if my trend line can do this. Now, I have from this low all the way. You see what I just did? I just used my trend line. For instruments like gold that can be massively volatile, sometimes they can respect these trend lines. Now, I started from this point where after price came down, started pulling to the upside. Now, for those who don't know, if you want to draw a good trend line, your trend line should look something like this. This is the format or the formula to draw a good trend line. So you start from the origin where price started pulling up from massively. So this was where this upward movement actually started from, because before it was bearish. Okay, that's one. Now, after marking this point, this is your origin. The next point should be the next time price came down and started pulling up again. So which is here. So you need the origin and the next touch. You just extend to the future like that. You are not going to be biased. So for instance, if I want to be biased now, just because I want to capture this area, then I'm going to have something like this. Like this. This is not a good trend line. This is a better trend line. So you notice, because I want to fit it into this place, I have to skip this one, or I have to fit it like this. No, it should touch. So it should touch like this. You see this touch now? Now it's touching. So then I can extend to the future, making sure that price still touch this level. Okay. So you can decide to fit it, but make sure that it still touches, right? So you see what I'm saying? So if I look at it now, you're going to see that I still maintain my touch. So what happened here was a false break. Price retested, but before you know, it didn't hold, it came back to the upside. Now, because there's a massive, gold is like, sometimes gold can be crazily and massively bullish. Any bearish break will not last for long. So we had a bearish break. We had another bearish break right here, right? But it didn't last for long. Now you can see that price comes back and is now respecting this my level again. Now, but on the other hand, because of this false break is 2 now. I can decide that, okay, let me also capture these false breaks, right? Let me also capture this. I can now have another trend line like this. I can now have another trend line like this, capturing these two. So there's something like this. So you can see I captured this touch and I also captured this particular touch, which means this is the area where if price comes down and I expect it to stop at this level and it doesn't stop, it goes all the way down. This is where I'll be expecting it, anywhere inside here. This is where I'll be expecting it to. Then I'll be looking out to buy again, right? Because it has done it twice. 1, 2, right? So perhaps it might want to do it again. So Now, inside of my lower time frame, I have my internal levels, which is also my highs and lows. Now, remember, after this massive movement to the upside, you can see this retracement before price continues, right? Okay, now guess what? It respected this our level here, so we already have it down there. Sorry. Okay, so respected this our level that we had before. Now, after price has broken this previous resistance, let's see, because here was broken at some point. Okay, so after price broke this major resistance level, retested, you can see some retest, a little bit first before retested. So you can see that price has a higher chance of respecting our trend line because it coincides with where our more like our support level is. Then, so might just be expecting something like this, then hit back to the upside. Hit back to the upside. Okay, so on the condition that whatever I'm doing now, remember before 2:30 p.m. But in case the fundamental comes and it can push price either up or down. So either ways, it can push price all the way here if it's close. Let me see. Then if it breaks all the way back down, then I'm expecting it back inside of this zone. Inside of this zone. Even if it breaks these two trend lines, then comes here. That because it's fundamental driving it now, not technical, which means it can potentially break my two trend lines completely, come all the way to this zone. If I see a slowdown here, and I see that price wants to start building some bullish momentum, then we are going to be buying again from this particular level. So that is my analysis on gold. Okay. Season said US 2000. Let's look at D40 first, because I know a lot of you trade indices. A lot of you trade indices. Okay, the same thing we do 4-hour time frame. Okay, let me take out everything I've drawn before. I think I have some levels here looking at. Okay, let me just continue. I don't think it stops anything. Refresh this. Okay, on my 4 hours. Let me zoom more out. There's something very interesting here. If I pick this trend line, I think I should analyze first before I start putting my trend line. Let me do that first. Okay, so my major levels, you can see this massive pull, you see this retracement to the downside. Yeah, we are going to be marking that level. After the retracement, the lowest point of it, you can see it here. Now you can see how many times price came to retest that same level again. Price is about retests. Now, for those who were not here when I started this, I said, what you see on the chart is a flow of orders. I call it order flow, flow of orders, right? Now, price is moving from what is sponsoring the movement of price is supply and demand. Supply, demand. Now, I'm not talking about supply demand strategy. I'm just telling you what fuels movement is based on the level of supply demand. So, for instance, at every point in time, price one is going to be more than the other. So, what do I mean? So, I said, let's imagine that I have investors' money. Like I'm a businessman. I have license to get money from investors, invest their money to business, make profit, you know. Now I have 10 billion in naira in my possession, but I need that 10 billion naira converted to dollars for me. It means that I'm going to be placing a demand for the equivalent of 10 billion naira in dollars in the market. I'll need it in dollars. Now, most likely, I might not be able to get all my 10 billion naira converted to dollars that same day. Let's say I might get like 3 billion converted to dollars. I still have 7 billion to go. So it's more like this. I get 3 billion converted. I place a demand. Demand pushes price to the upside. Okay. I get my 3 billion converted to dollars that same day. So I will wait for probably another few days, for the sellers to go and get more dollars. All those give you the change guys or the banks to get more liquidity. So once they get it, I come back again. Meanwhile, look at the logic, please. I need you to just really understand. If you understand this concept, I think we've done justice to it. So when I was buying, let's say I bought when $1 to Naira is at 1,000 Naira, so that you understand this now. So I placed the demand for my 10 billion Naira in value of dollars at 1,000 to dollar. I was able to get 3 billion converted. So I'm going to be waiting for a few days. Meanwhile, that my action, I mopped up the dollar in the market. Hence, dollar became very scarce. Okay, became quite scarce. So I will need to wait for a few days for injection of more dollars. After I do, I have successfully moved price that same day from 1,000 to like 1,200 to $1. My demand creates scarcity. If you remember, much more buyers in market pushes price to the upside. Okay, now I'm going to, if I now buy the next batch, if I now convert another, let's say like 4 or 5 billion to dollars, remember the price is now 1,200. I will be at a loss. I want everything. So I will make sure that we force price back down. Why is my chart shifting? We'll force price back down. We'll force it back down to that my 1,000. This is where I want to buy again. So the moment price comes back to this level, okay, I think I've been getting it wrong. The moment it comes back to my one, I place another demand. I convert like extra 3 billion. I have like 4 billion to go. I keep doing that until my orders are complete. Then price will just fly away, right? So that is why it's very, very good to take cognizance of those significant levels, okay? Now, sometimes this is what we do now. So for instance, as price was doing this, creating support, it also created a resistance, right? It created a resistance level, which was broken. Now, it is not every time that after price breaks a resistance, price comes to retest that same resistance. Not always, guys. Not always. That's why I'm not keen on it. The best way is take cognizance of when price was doing support. Now, when price moved out, you might want to know that resistance. Okay, let me still put it. Let me just still put it. Let me put it back there. So just copy and paste what I just said here now to every other, especially your indices, your US 100, your US 2000, your D40, all of them, okay? So you just extend it like this. Okay, good. Now, but what I want you to do is, after price has gone significantly, you wait for a retracement. After the retracement is over and price starts pulling up, go back to where the retracement stops, which is in this case, this level right here. This is where I am interested in doing business right now. Now, that means potentially price might return to this level. And when it returns to that level, what should I be doing, guys? Should I be buying this market or should I be selling default? Okay. Okay. Yes, on the two, yes, on the next page. Sorry, I'm in top. Okay, thank you. You see, so it gives us a better perspective of what to expect. And in case you feel, oh, whatever, just have your stop loss somewhere below, right? To protect yourself. Have your stop loss somewhere below. For US 100, let me take out this indicator. Yeah, we also have some very, very interesting indicators uh, that Raleigh has put together that will help you break down some of these processes I'm talking about, right? For instance, all those key levels I'm talking about, there's an indicator that's going to mark those key levels for you. Just put the indicator on, for instance. I don't really want to show that one right now. Let me pick something else. Let's say this one, for instance. There's an indicator that is going to mark these key areas for you. You see the way it marked this? Came down again, mark this one, came down again, mark this one, right? So there are certain indicators that are going to, and as marking them, it's going to be telling you what to expect. So if price can pull up to this level, you're going to be seeing a sell and the likes, all right? So that is just by the way. This is manual. We have that, make it automatic. This is US 100. Okay, from a higher time frame, from 4 hours, do the same thing, guys. Do the same thing. After this massive pull-up, price drop to this level, right? So we mark this key area here as our support level, and we extend to the future. So you will see that price is just aiming for that particular level. So we are not, we are not just looking at the market blindly. Price is aiming for that particular level. Meanwhile, after price did this, and you see this retracement and it continues, right? So at this point here, this also is a significant area. So just experience a break and price looking at holding. Where is it going to? Here. If you can get to this place, what do you expect to buy it, right? Good. So this is my analysis for US 100. Price potentially can pull this way, after which we'll be looking at here. I don't know how long it might stay inside this range, but in the long run, price will go back this way. Okay. Okay, so I think being able to analyze as much as we can. Lastly, this is the last one we're going to be doing. So US 2000. Let me take all of this out. Okay, US 2000. 4 hour time frame. Wait, hold on, please. For my US 100, I'm sorry. For my US 100, did we switch to a lower time frame? US 100, did we? No, this was not the one that. Whoa, we need to switch to lower. I'm so sorry. We're not yet done. We're supposed to switch to a lower time frame. Okay, this is how it looks like on my lower time frame. Okay, so personally, I think I'm still expecting price to still drop. I'm still expecting price to drop at least to this level right here. Because on your 1 hour time frame, you might be shocked that you might have another little resistance or support or something like that. So you need to know. Okay. So I still expect a further drop before we are now going to be having some massive rally to the upside again. So lastly is my US 2000. So 4 hour time frame. 4 hours. Then after this rally, see this retracement where it ends. I mark it. This is it. Massive movement retracement ends here. So you can see that price is still using that level, this level here as reference. Okay. So I think this makes it even simple for us. So we know what to expect from this level. Now price moved up, retraced, and continued also here, which makes here also a point of interest. So you can see that here now became our flip zone. Hence, instead of price to stop at this level and continue, price came lower, aiming for the next support. Now, sometimes you might be shocked that there are times where, let me see if I have another. Okay, good. So, which means that in case, see this, let me show this movement, this retracement, hence, this place also becomes significant because it's step by step. Remember, it's like a building. Price is going floor by floor. So you need to know every floor to know where price is headed next. All right. So price is in between these levels. Hence, my 1 hour time frame should give me a better perspective. Okay, it should give me a better perspective. Now, my 1 hour, notice that this place has been targeted as a support level, which is now forming a resistance here for us internally now, internally. Okay, so there might be a break. Meanwhile, this place is a massive supply area, hence it's going to be more of a bearish momentum back to the downside. Bearish momentum back to the downside. This is US 2000, but the overall trend, if price can successfully get back all the way down here, then you should expect a rally back to the upside. Probably break this level at some point, and even later in future, get to this level. Okay. So thank you so much, guys. I think this is the much we can do for today, right? I did. I had to go back to lower time frame on the I did. Or did I not? Oh, that means I did not. So sorry about that. Okay. So price is heading towards a high on my 1 hour time frame. It's heading towards an area of supply. So I just need price to head to this place before we can start taking ourselves from it. Okay, so thank you so much for being in this review. Wishing you a very, very peaceful day. All right. You're most welcome, Moji. You're most welcome. All right. Thank you. See you. Remember, for you're welcome, Matilda. You remember on Friday, 11 a.m., you're going to get notification from your account managers. But please watch out for it also. Thank you so much.